back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are Ricus Reeders from PSG Hole-in-One Ruimsig and Drikus Combrinck from Capicraft. If you'd like to send questions, please email us, stockwatch@bdtv.co.za, or via SMS on 41392. Ricus, good evening to you both. Drikus, I'm going to start with you tonight. It was a pretty muted start to the week for the JSE, although I feel that the JSE actually is just pretty muted overall at the moment. And we've talked about the declining volumes on the market, but it was nonetheless fairly positive. What did you take away from today?
Yeah, a bit of a rebound on some of the resource counters that we saw really got killed the last week or so. I see some of the platinum miners are up a bit. That's good to see for, we've got a little bit of platinum exposure, but not on the big ones. So it's good to see some platinum names doing better. And yeah, I think our market, Julieta, is less dependent on what's happening in the US these days. And I think we're taking our cue the last few weeks, especially from China. So we saw last week when China came out with those very bearish CPI and PPI numbers, our resource counters just dove. So I think we will be taking our cue from there. And obviously this is an election year, and running up to the election, I actually think volumes will decline as people just put their portfolios into neutral.
Yeah, I mean, Ricus, do you get the sense that a lot of people are going to shift money into cash until they have some political certainty in South Africa?
Cash or offshore, I would imagine. Yeah, because as Drikus said, I think it's our market is to a large extent resource dependent. It's one of the big drivers in our market, and China's not coming to the party. So there's no joy from that side. So I think people are just moving offshore. They're staying in cash, or they're staying away from local companies, and we've had this story now for a number of months going on, and you could actually see it in today's market. We were down most of the day. The Americans opened fairly positive, and you had a little bit of a spurt in resource stocks. Some of the brand hedge industrials, and that took us into the green. But the broader market, small caps down about 0.5%, mid caps barely moved. So same old, unfortunately.
Yeah, I know, unfortunately, and I wish we could somehow change this. Just keeping with the resources stocks, and you mentioned the platinum shares, Drikus, and a viewer sent a message earlier asking why the steep drop in Impala shares, and I think they were referring to what happened last week. I mean, as you said, there was a bit of a rebound. Is there room for some more losses? I suppose that's the question now, whether or not this is the bottom for PGM players, or whether there's further to fall.
The pendulum always swings further than it's comfortable. It's always longer and deeper than one imagines from the start when you start investing in these cyclical sectors. So my advice is generally, prepare for levels that you think are insane, and keep a little bit of cash for those levels, because those come around to at least 2 times a decade or so. So I do think it can go lower, quite a bit lower, and but it does offer value here. So if you're going to go in, it depends. If you think that electric vehicles are going to replace ICEs within the next decade, I don't. But if you're in that camp, then you certainly shouldn't touch PGMs. Obviously, there are other uses for PGMs. But if you think that the transition is going to be slower than the market is currently pricing in that there will be other use cases for PGMs. And if there's some, let's say, midway between ICEs and EVs, which is hybrids, which actually is the cost to benefit of a hybrid is much higher than EVs, then those will have much higher platinum and palladium loadings than current ICEs does. So that will be very bullish. I do think there's an upside scenario for these two, but it will take time to play out. Short term, it's like catching falling knives. use gloves and only buy a bit at a time.
I mean, Ricus, you've got a good sense of the technicals. So if you had a look at a chart of implats or amplats, or actually any of them for that matter, do you think that there is further to fall, or do you think they're starting to show some sort of bottoming out?
Yeah, unfortunately, Impala's gone below the December low, which puts us on its way to the 2020 low, about 55.50 rand. That's just target, it's just a technical target, and it's voodoo most of the times, but that's what it is. It's a definite downtrend. It shows no stop of or no signs of abating, unfortunately.
Okay, so you would probably avoid them as well.
Yeah,
Get
yeah.
your finger sliced off in the process.
Drikus is perfectly correct. At some stage, these things are going to be insanely cheap, and possibly get more insanely cheap. So wait for the market to turn, and remember, bear trends turn on an event rather than bull markets, which is a process before that turns. So what one really needs is an absolute complete sell-off in those markets where you've got almost
washout.
zero confidence. Yeah, complete washout, and then it's going to start looking interesting. But at the moment, it's just being marked down relentlessly.
Yeah, I know. It's a really painful process to endure, especially if you are still long these shares. Okay, so PGMs, it's a very uncertain future, and you talk about the toss-up between the internal combustion engine and the EV electric vehicles, how that's going to play out. What about copper? There's a question on the investment case for copper in the next 5 years, and which ETFs and stocks would you pick that are copper focused for the next 5 years? The question was directed at David and Wayne, so I'll ask them too on Wednesday nights, but I'd be interested to get your views. Drikus, do you think there's a strong investment case for copper, and if so, which company or ETF would you buy?
I do so, not only because there will be some electrification of the economy, not only locally we will be electrifying quite quickly. There's a lot of renewables coming on. All those need transmission, much more transmission than you get from a very concentrated coal plant. You have to build stuff from all over, and the same is happening elsewhere to a large extent. It won't replace conventional uses. That's not the base case here, but just the marginal demand, coming from renewables, coming from batteries, not only in EVs, but in many other uses where battery technology has made the use of various tools and implements and etc. or plant more productive. That is increasing, and I just see base metals in general, not only copper, but base metals in general, demand picking up over the next decade or so. But somewhere before that, you might see a big slump in the economy, and that will be the time to load up on these. But you should have some exposure. Shouldn't be a very overweight position, not yet, but you should have something there. And it's just a time horizon thing at the end of the day.
So, and where would you take your exposure?
Well, we own some Glencore. That's the easy one on the JSE. I'm not bullish iron ore. I haven't been for a decade, and that's done well for us. So Glencore, I think Glencore's moving into some other. Well, they're moving into precious metals for the first time. So they're expanding their portfolio, but they're not an iron ore, which obviously Anglos and Kumba and Billiton, they're all very heavy iron ore. So trying to avoid that. Yeah. And so Glencore is the only play really on the JSE for copper. There's other smaller ones as well, but that's the only serious one.
Yeah. Ricus, your thoughts, and do you agree with Drikus that there's a long-term investment case for copper, but it might be interrupted by short-term global economic issues? I mean, it's not called Dr. Copper for nothing, as a sort of a bellwether of the global economy.
Yeah. Yeah, what's been depressing it, as with all base metals, is obviously China and their deflation at the moment. I don't think that's going to turn around soon. But as Rick said, in general, apart from China, worldwide, there is a need for copper that's only going to increase in the medium term. Short term, I think a lot depends on what's going to happen with the other, shall we say, dependent factor, and that's inflation. So we are seeing, and obviously American inflation is the big one on the block. So that's starting to go lower, but I won't be surprised if later in the year, early next year, we see another little run in inflation, which will give you that low in base metals prices that Drikus have been talking about. And I think that's where I'm going to get really interested. But just in case you're wrong, have some exposure. Glencore is, as Drikus said, the obvious one. If you really want to go and gamble a little bit, do one of the smaller copper players in South Africa. It's a 360 or copper 360 and Briscoe.
Yeah,
interesting little
copper 360 and it's Orion, I think.
Yeah.
I mean, personally, I picked these for David's Crystal Challenge. I picked Copper 360. It'll be maybe the one year that I didn't pick Glencore, and I'll probably regret it. So maybe as a reverse barometer for things that are going to do well. Are there any offshore copper stocks that you would look at? Because you have, what's the Chilean one? Codelco.
Freeport McMoran. That's a big one. We've owned it before. We haven't got it in portfolios at the moment. I think Ivanhoe also has a very big copper exposure as well. I know Robert Friedland has been very bullish copper himself. If you want to look into if you want to get bullish on copper, listen to Robert. He's extremely bullish on copper. Yeah.
But, so maybe not someone to
don't ask a barber if you need a haircut.
Yes, indeed. A viewer has sent us a question on iron ore companies. So Ricus, notwithstanding what you said about iron ore, the viewer asks, can I please get the panel's view on the following companies, Kumba and BHP? Which one would likely outperform the other, looking into assets and geographic locations? So Ricus, I think I'll ask you first, maybe seeing as you're not so evidently anti-iron ore. Which, if you were going to pick one of the two, firstly, which would you go for?
Well, the view is obviously bullish on iron ore, so let's assume that iron ore is going to perform. What is going to outperform, or which one? It's the same one that's going to underperform depending on the circumstance. Kumba has got a lot more potential to have a heck of a run if things start going right for it, and that's specifically because of its geographical location, which is South Africa. We know the problem with Transnet. We know the problem with electricity and labor and whatnot. So if things turn positive for Kumba, you will have very much an outperformance above BHP Billiton. But unfortunately, the opposite is also true. If we don't get some kind of positive news on Kumba, it will underperform BHP Billiton because it's more risky. My own preferred entry is therefore BHP Billiton because you're getting a geographical risk reduction. Plus the fact that they're not simply only iron ore, you get a bit of diversification as well. So I'd rather play it safe than, try and hit the ball out of the ground by just concentrating on the Kumba.
I mean, in fact, if you look at so we've had the one-year chart of both BHP and Kumba. I mean, Kumba has kind of been the safer play, which is quite interesting. Drikus, maybe I can ask you: have you been quite surprised by Kumba's resilience, actually, notwithstanding the fact that?
Well, it's a very low cost producer, so that definitely plays into Kumba's. I'm with Ricus actually. I think from a portfolio perspective, risk reward BHP is a bit better. And if you want to get if you think you can get your timing right, maybe you don't think you can get your timing right, but you do want to be there when Kumba runs, because when it runs, it really really goes. Right? Just wait for it to cross the 50-day moving average before you buy. It's easy trading rule. Wait for the 50-day and then put your trade on. Meanwhile, just get your exposures through BHP Bulletin.
Okay. What about a share that is entirely removed from both Kumba, BHP, and also copper, and it's Bola Meta? The viewer says, I own some Bola Meta shares. They're somewhat illiquid. What are the share prospects for growth as indicated in their recent AGM? Drikus, if I may stick with you here. Very solid little company, but...
Yeah, I haven't done a DD on Bola Meta for quite a while, but I think it's basically in a basket of a lot of locally listed JSE stocks that offer very good value. I'm not sure what management at the moment in BCF is doing, but I know of a few mid caps where management are really doing a lot to deliver value to the shareholders. So yeah, if it's in that basket, I don't know, because maybe you know the company better than I do.
I used to know it better. I mean, track record wise, they've been listed since God knows when. I think it's
1987.
one of the oldest listings on.
It was an 87 listing, I think.
Yeah. I mean, but the company as an existing entity goes back, I mean, decades. And they've always been extremely well run. They branched out into, soft drinks and packaging a number of years ago, and that didn't work out very well. And as a result, they that track record they had, I think, of never making a loss, that went by the wayside. They've solved that, and as Drikus said, at the moment they are sitting in very cheap territory, but can remain there for a heck of a long time unless sentiment towards the local market itself turns. So I'm not sure what the div yield is, and that's probably about 4 or 5%. I won't be surprised. And well run, well managed at the moment. Great set of assets, and boring, unfortunately, because there's no enthusiasm.
Yeah.
Even for things which are extremely.
Yeah, they're sitting with net cash, like so many other smaller mid caps. Yeah. Net cash, solid cash returns. I don't know, but you know, once again, I haven't done due diligence on BCF, but they're probably buying back shares as well, like a lot of other mid caps are. If management is doing that, so we've got a very strict rule when buying value stocks in SA. The number one rule is if it's cheap, make sure management is on board with, you know, creating value. If they're not buying back shares or unbundling businesses or selling businesses, we're not buying something just because it's cheap.
Yeah. Can I just ask a stupid question there, though? If you have a liquidity problem in your share is cheap, and management is buying back more stock, doesn't that sort of compound the liquidity issue?
Yes. Well, in the right direction for now. So if it's moving in the right direction, shouldn't be a problem. But eventually, if the free float gets too small, that obviously, yeah, that leaves you with a bit of a conundrum longer term. Unless the company grows. If the company can continue growing, that shouldn't be a problem. If it can increase the market cap, so if it increases the multiple, basically, so you're buying back shares, you're decreasing the share amount outstanding, but also you might be increasing the market cap if you're pushing up the rating of the share, and that might push the share onto the radar of some bigger institutional players, and they might consider buying it then it might be more liquid going forward. But once you cross a certain threshold, yes, Karoo is maybe one that is the case in point. I think the free float's 80%, or not 80%, free float's 20%, and now they're buying back shares. I'm not sure why's they listed there.
Okay. Well, yeah, I suppose then they went to NASDAQ to try and attract a better market rating, and it hasn't really played out for them so far. Ricus, I don't know if you have anything else to add there, other than if a company is buying back its shares, it's illiquid, maybe the prospect is to delist the company. You know, if you don't stay listed on the exchange, and you would have to buy out the minorities at a higher price. Would you stay in a share for that particular reason?
Well, it depends on, I think, on your investment period. In other words, if you want to make a quick buck, no. But if you're satisfied that you're getting a decent dividend return, you're, as I said, hopefully the company is not only buying back shares, but also investing for capital growth. I mean, I won't buy a company just because it's buying back its own shares. I mean, that just means it doesn't know what to do with its money. So so buying back shares can add to your investment. It doesn't necessarily add to the company's operations. But if there's a combination of share buyback and investing for the future, even if the float gets smaller, at some stage, it will either be taken out or it will grow into a bigger company, because that's what happens with mid caps. Now, either get bought out or they become big companies, or they go bankrupt, obviously. But
it's quite a stark set of choices.
Mid caps don't stay mid caps indefinitely. They either get bought or they grow.
Okay. All right, quick question before your stock picks. Please ask the panel which ETF between the SA Top 40, the S&P 500, or a property ETF, and I presume local, would generate better returns for a tax-free savings account. Drikus.
I like doing the property thing in tax-free or in even RAs or in ELAs. Because it's, that's REIT is normally taxed as the income. And within those accounts, it's not. So it's one of the better ways to get your property exposure, rather in a tax-friendly vehicle or entity than holding it in your discretionary account. So yeah, I tend to focus my property exposure in one of those accounts.
Okay. Ricus, how about you?
I think at the moment, both the top 40 and the S&P 500 is so concentrated in a couple of high flyers that it's, the breadth involved in both of those indices is so narrow that, to me, that's dangerous. I would, if I'm going to do an ETF, whether it be local or offshore, take a look at broader markets. Don't go for the top indices. I think both, whether it's here or offshore and dangerous territory. So yeah, and Drikus has got a great idea. Property tax-free. If you don't know what else to do.
Yeah. Okay.
I think the property of those three indices, the property indices is at the moment must be the cheapest. Yeah. Offers the most value of those three.
Okay. Yeah. All right. Thanks. But getting to your stock picks this evening, Ricus, what is yours?
Ricus was talking about hybrids when we started this program, and stock pick is Tooto, who is the leader in that field. They were. Markets were very miserable about them 2-3 years ago because they weren't going on the EV bandwagon. That's turned around. Great results a couple of days ago. EV sales declining, hybrid coming into fore, and what excites me most is the battery technology that they're designing at the moment, which is away from your lithium-ion type of battery to lithium iron phosphate, which is a solid state battery, which can be quite a revolution as far as both hybrids and EVs are concerned. And they're the biggest car seller in the world. You can't go against that. These guys know what they're doing.
Yeah, I mean, actually, the share price over a year has been fantastic. So, and I guess quite surprising. Okay, so Toyota for Ricus. Drikus, how about you?
I'm very dirty tonight, Julieta. I'm buying Sasol.
Very dirty indeed.
Yeah. So it's the absolute ESG nightmare that they've gone through lately. It's not over, and I just think a lot of institutional investors are throwing it out of the portfolios because of the ESG problems that they've had. That's one. Two is chemical margins. I think chemical margins are already so thin at the moment. And then thirdly, obviously energy producers all over the planet, all integrated oil companies, etc. Those guys are trading at low multiples for some reason, because apparently we're all moving to EVs. I just don't buy that. We've done our homework. Unfortunately, we're still going to sit with fossil fuels for a long time to come. 5 years from now and 10 years from now, the world is going to be burning more fossil fuels in one way or another. and Sasol will be one of those, and it's sitting at a very low multiple. If you just extrapolate the last 6 months earnings, sitting below a 5 price earnings ratio.
Yeah.
Maybe they take each year or there, but there's proper margin of safety in the valuation year, and they will spend some money in coming years addressing that E in the ESG rating. There is some ways that they can decrease their carbon footprint, etc., or just push up the S&G part of the ESG equation.
Yeah, they're going to be spending some proper money, they've said, in the next couple of years in order to push up the E part. Okay, we shall leave it there. Clean and dirty tonight. Ricus and Drikus, thanks very much for joining us. Ricus Reeders is from PSG Hole-in-One Ruimsig, and Drikus Combrinck is from Capicraft. Up next, the close. Stay with us.